Thank you for joining our presentation. Today we're going to talk about the true effects of student loan debt. Currently, millions of people are in default. However, millions more sign up for those same student loans each year. So that means even though millions of people are unable to pay their student loan debt, the system still allows millions of more people to sign up, with some of them ending up with the same fate of ending up in default. So how does this information affect me? I'm not in college yet. I don't have any student loans, so why does this even matter? Well, let's talk about that. Default means that you fail to make your loan payments in a timely manner. Some people are unwilling to pay, and some people are unable to pay. I find with my clients, even if they are unwilling, it's simply because they're unsure whether or not if they make this payment, if they'll be able to buy food or purchase gas to get to work the remainder of the month until they get another check. So even those who may consider themselves unwilling, it really results back down to an inability to pay because they're concerned as to whether they'll make it to their next paycheck if they make this student loan payment. Oftentimes, default happens because students are unable to find a good paying job. Sometimes we're told we're overqualified. We have too many degrees or too much experience to qualify for this particular job because they don't want to pay us our worth. So that's pretty discouraging. A second option could be once you graduate, some people won't give you a chance because you don't have the experience, which doesn't make sense. A lot of people put their job experience on hold so they can focus on completing their education to qualify for a higher paying position, but some positions kind of count you out if you don't have that experience. So these are some reasons that kind of lead to default. Something not listed here is sometimes students don't have the resources to finish. So if you stop school halfway through or before you complete your degree, oftentimes you may qualify for a job paying less than what you were reaching for with your degree. And all of those could lead to default because the individual does not have enough money to cover their student loan debt in addition to their daily living expenses. So what does default cause? You can accrue collection fees, your wages can be garnished, your credit score can be decreased, you can have a difficult time obtaining future credit, which means if you try to go get a car or purchase a home, you'll have an issue with that. If you expect to receive a tax refund during income tax time, the IRS or the federal government can take that to offset what you owe them in federal loans. You can have a difficult time finding a job because some jobs now look at your credit score. And then you can also have issues returning to school if your loans are in default, because if you use loans to fund your college career, if they're in default, you can't get more loans to go back to school. So this student loan debt and being in default can also affect your standard of living. We talked about the home buying process or your ability to buy a car. Both of these look at your debt to income ratio, and some people have even been denied their mortgage price through their mortgage process because they simply did not make enough to cover the student loans that were showing on their credit report. The same happens with a car. They'll check your debt to income ratio as well. It's not as stringent as a home buying process, but it could cause your interest rates to be higher, meaning that you'll pay more for a car simply because those student loans are showing on your credit report. Even if you're not in default, just having them there compared to what you're bringing in can cause you to have increased interest, just like a low credit score would. It can also limit your ability to take family vacations or pay for common needs, because if your loans are not in default and you're paying them, that's pretty much less money out your paycheck that you have to use for those other things like vacations or gas or food or different utility bills. So how can I avoid this obstacle after college? Let's talk about that. Our Cash for College membership will help you better understand how this student loan debt will affect you in the future. We help you find ways to limit the amount of loans that you will need and also find non-traditional ways to begin a college savings account. We see in the news often that tuition is increasing. That means people are needing more student loans, and the amount of interest that's compounding on them while you're in school or while you're trying to pay them off can almost cause you to pay double what you took out for college in the first place. So with our Cash for College membership, we take a deep look at that to help you both limit the amount of loans that you'll need by choosing the right college for you, comparing in-state versus out-of-state, public versus private school, or even community college versus going to a four-year university, and using those ways to limit the amount that you need in addition to applying for scholarships or the non-traditional ways that we'll suggest to you throughout the membership can drastically reduce the amount of loans that you'll need and even help some students avoid student loans altogether. The membership is $37 biweekly, and what members will receive are monthly webinars on financial literacy and income creation. We'll send consistent reminders for them to apply for scholarships and practice their essays because we fully understand that an hour spent searching and applying for a scholarship that can bring in $250 or more, there's really nothing that you can do in an hour that brings in that much money. And sometimes the scholarship process can be a headache, but it's highly worth it when you look at it in that manner. If you're working a job that pays $10 an hour, it would take you 25 hours to make that $250, where you could spend that hour searching for a scholarship and writing your essay. So just the time benefit alone, it's worth it, even though it may seem like a headache. You also receive group coaching on limiting the need for student loans. Our membership format will allow you or your student to receive consistent access to financial literacy throughout their entire college career. Studies show that a lot of times people end up with more student loan debt than they can handle simply because they were unaware of the consequences or unaware of the other options available to them. Financial literacy, the entire purpose is to help you understand how to use money and how to use your resources and gain more resources. So continued access to this information throughout their college career can definitely set your student up to be financially sound and make financially sound decisions and avoid some of the issues that some of us who received student loan debt years before this was even a thing or this was even a conversation. It'll help them avoid some of the issues that we're facing today. Definitely the earlier you start, the better. We'll help anybody that's in high school from their freshman year to people who are college graduates, either, like we said, limit student loans or begin helping them pay off the loans that they already have through our techniques and concepts. Thank you for your time. I, again, appreciate you joining us for this short presentation on how student loans can affect your future income. You could reach us at info@incomereinvented.org and definitely check out our website at www.incomereinvented.org. Thank you for your time and enjoy your day.